Cameco has been on the radar of uranium investors. Could this be the best uranium stock to buy before prices skyrocket? In today's video, we'll explore Cameco's position in the uranium market and whether it's time to invest before the next big surge. Cameco is one of the world's largest uranium producers, supplying nuclear fuel to power plants globally. As nuclear energy gains prominence as a clean energy solution, uranium demand is rising, positioning Cameco at the forefront of this expanding market. The company operates some of the highest-grade uranium mines, giving it a competitive advantage in production costs and output reliability. Before we dive in, make sure to subscribe to Stocks Telegraph for daily stock insights, expert analysis, and the latest updates on market trends. We bring you in-depth research on the hottest stocks, including insights into the rapidly evolving energy sector. Drop a comment below. Do you think uranium prices are set to surge? And is Cameco the best pick in this sector? Or do you have your eyes on another uranium stock with even greater potential? Let us know your thoughts, and don't forget to hit that like button to support the channel. The uranium market is experiencing renewed interest as nuclear power plays a critical role in global decarbonization efforts. With many countries prioritizing low-carbon energy sources, nuclear power is gaining traction. According to the World Nuclear Association, nuclear power provides about 10% of global electricity, and this percentage is expected to rise as governments seek cleaner, more sustainable energy sources. A key driver for higher uranium prices is the supply-demand imbalance. While new and restarted reactors, especially in China, India, and parts of Europe, are increasing uranium demand, global production has not kept pace. Geopolitical tensions, fluctuating market conditions, and supply chain disruptions have all contributed to a shortfall. With more reactors requiring fuel replenishment, industry analysts expect uranium prices to rise significantly in the coming years. These dynamics favor Cameco, which is well-positioned to meet the growing demand. As a leading uranium supplier, Cameco benefits from long-term contracts and a diversified global footprint, making it a strong player in this evolving energy landscape. Cameco's core operations include uranium mining, refining, and fuel services, supplying nuclear reactors worldwide. Its primary assets, McArthur River, Key Lake, and Cigar Lake, are among the highest-grade uranium mines in the world, allowing for cost-effective and efficient production. Financially, Cameco has shown resilience by implementing strategic production cuts during low-price cycles to preserve cash flow and maintain stability. As uranium prices rebound, its lean cost structure positions the company for improved profitability. Internationally, Cameco maintains long-term contracts with major nuclear utilities in North America, Europe, and Asia. These agreements provide stable revenue streams, shielding the company from short-term spot price volatility and reinforcing its status as a reliable uranium supplier. Cameco's stock has seen significant movement over the past year, closely following trends in uranium spot prices. In late 2024, CCJ's share price surged by approximately 60%, driven by increased demand and supply constraints. However, it also experienced short-term dips aligned with fluctuations in uranium prices. Financially, Cameco delivered strong results in Q4 2024, reporting net earnings of $135 million and adjusted net earnings of $157 million. For the full year, net earnings reached $172 million, with adjusted net earnings at $292 million, a substantial improvement from the previous year. This growth was driven by higher sales volumes and improved average realized uranium prices. Investor sentiment remains cautiously optimistic. While Cameco's fundamentals are strong and it has secured long-term contracts, concerns about potential oversupply or regulatory shifts persist. Nonetheless, the continued appreciation of CCJ's share price suggests that investors anticipate further growth in the uranium sector. Japan's nuclear energy revival is a key growth catalyst. After the Fukushima disaster in 2011, Japan halted all nuclear reactors, but recent government policy shifts are supporting their gradual restart. As of 2025, 11 reactors have resumed operations, with plans to increase nuclear power's share to 20% of the energy mix by 2040. This trend is expected to drive uranium demand, benefiting major suppliers like Cameco. Globally, new reactor construction is also on the rise. Countries investing in nuclear energy as a stable power source are further boosting uranium demand. With Cameco's extensive production capacity and high-grade reserves, it stands to gain from this expanding nuclear fleet. Cameco has also strengthened its market position through key acquisitions and partnerships. In 2022, it partnered with Brookfield Renewable Partners to acquire Westinghouse Electric Company, a leading nuclear services provider, for $7.9 billion. This deal, finalized in 2023, grants Cameco a 49% stake in Westinghouse, expanding its nuclear energy capabilities beyond uranium mining. The company is also investing in sustainable and innovative mining practices. Its focus on advanced uranium extraction technologies and commitment to ESG principles make it an attractive option for investors looking for environmentally responsible companies. Despite its strong position, Cameco faces several risks that investors should consider. Regulatory challenges and geopolitical tensions could impact operations. For example, the U.S. recently considered imposing a 10% tariff on Canadian uranium imports, which, if implemented, could raise costs and affect profitability. Additionally, Cameco's joint venture in Kazakhstan, JV Inkai, faced temporary production halts due to government delays, demonstrating how geopolitical issues can disrupt supply chains. Market volatility remains a concern. Uranium prices are cyclical and influenced by factors such as policy changes, global energy demand, and supply constraints. A downturn in uranium prices could impact Cameco's revenue and production plans. Operational risks, including labor disputes, equipment failures, and unexpected production suspensions, also pose potential challenges. Cameco has experienced mine shutdowns and strikes in the past, which affected production output. Investors should factor in these uncertainties when evaluating CCJ as a long-term investment. Cameco has established itself as a dominant force in the uranium sector, backed by high-grade mining assets, financial resilience, and long-term contracts with global nuclear utilities. With the growing demand for uranium, Cameco is well-positioned to capitalize on nuclear energy expansion. Its disciplined production strategy, strategic acquisitions, and commitment to sustainability reinforce its status as an industry leader. However, investors should remain aware of risks, including uranium price volatility, geopolitical factors, and potential regulatory challenges. Despite these uncertainties, Cameco remains one of the most attractive uranium stocks due to its market dominance and ability to navigate industry fluctuations. With new reactors coming online and supply constraints driving uranium prices higher, CCJ appears to be a strong contender for investors looking to capitalize on the nuclear energy boom. Do you believe Cameco is the top uranium stock to buy before prices surge? Or do you see alternative uranium plays in the market? Drop your thoughts in the comments, hit that like button, and subscribe to Stocks Telegraph for more in-depth stock analysis. If you know anyone interested in clean energy or uranium investing, share this video with them. Thanks for watching. Stay tuned for more stock insights right here on Stocks Telegraph. Don't forget to tap the notification bell so you never miss an update. See you in the next one.